Welcome to this explainer. Today, we're breaking down your Bonitas Primary Medical Aid Plan and building what I like to call your ultimate financial defense strategy. Look, whether you're a brand new member just trying to navigate your coverage, or you've been around a while and just want to make sure you're squeezing every single ounce of value out of your policy, you're in the right place. Understanding the specific mechanics of your plan is absolutely crucial if you want to avoid those nasty, unexpected out-of-pocket expenses. So, let's jump right in. Here's our roadmap for today. We'll be covering 5 key areas. 1. Member costs and dependents. 2. Navigating your day-to-day benefits. 3. The rules for chronic medication. 4. Hospital networks and co-payments. And finally, number 5, your international travel cover.
All right, starting off with Section 1, member costs and dependents. Let's look at your baseline monthly contributions and how your family structure actually impacts your wallet.
Now, a super competitive feature of this plan that you'll definitely want to know about is the child dependent rate. It's just 1,141 Rand per month. To put that into perspective, the main member pays 3,588 Rand, and an adult dependent is 2,807. But when it comes to adding your kids, this plan is structured to be incredibly family-friendly.
In fact, larger families can truly optimize their premiums here. Why? Because after your third child, any additional kids are covered at absolutely no extra monthly cost. Yep, you heard that right. That means your 4th or 5th child is completely free in terms of your monthly premium. Plus, your dependents get to keep paying these significantly lower child rates all the way up to age 24. Honestly, that is a massive financial relief if you got university students or young adults still finding their feet.
Moving right along to Section 2, navigating day-to-day benefits. Let's explore exactly how the primary plan covers you outside of the hospital for your routine care.
So instead of a traditional savings account, you get a pooled overall day-to-day limit that dynamically scales up as your family grows. It's pretty straightforward. If you're on the plan by yourself, you've got 5,540 Rand for the year, but as you add dependents, this shared family pot increases rapidly, maxing out at a really generous 12,190 Rand for a family of 4 or more. This is essentially the pool of funds you draw from for your everyday doctor's visits, medicines, and tests.
But here's the crucial catch you need to remember. Your overall day-to-day limit is compartmentalized into 4 distinct sublimits: GP and specialist consultations, acute and over-the-counter medicine, x-rays and blood tests, and auxiliary services. What this means is that you can't just blow your whole budget on one single category. For instance, you have a specific maximum amount allocated just for GP and specialist consults, and a totally separate maximum for your acute medicines. This structured approach is actually great because it ensures you always have funds spread across different types of medical care throughout the whole year.
Okay, let's turn to Section 3, Rules for Chronic Medication. If you happen to manage a long-term health condition, understanding these strict rules is literally your best defense against unexpected bills.
We want to build a foolproof strategy here, so just follow these 3 mandatory steps to successfully register and claim your chronic benefits. First up, you need to confirm that your condition is on the list of 28 prescribed minimum benefits, things like asthma or hypertension. Second, the specific drug your doctor prescribes must be on the plan's approved formulary list. And third, you have to collect your medication from the designated service provider, which is Marara Pharmacy.
Now, consider this next bit a massive red flag alert for your wallet. Ignoring your designated service provider means you are instantly hit with a 30% copayment straight out of your own pocket. Let's say you just decide to pick up your meds at some random non-network pharmacy, or maybe you insist on a fancy brand name drug that isn't on the formulary list. Well, you're going to be paying that 30% penalty every single month. It's just not worth it. Stick to the rules, use Marara Pharmacy and the formulary, and your chronic medicine is fully covered.
Next up is Section 4, Hospital Networks and Co-payments. Let's tackle the biggest financial risks, major medical events, and how your network choices directly dictate your out-of-pocket costs. Just like with your chronic meds, your absolute primary strategy here should be exclusively using network private hospitals and network day hospitals. Doing this helps you dodge massive 30% penalties or even a crazy 6,500 Rand day surgery copayment. The primary plan uses a very specific list of private hospitals. If you have a planned admission and you just choose to go to a hospital outside of this designated network, you are voluntarily taking on a 30% penalty on the entire hospital bill. Ouch.
But hey, remember, if you want to avoid the hospital ward entirely, this plan unlocks some incredible alternatives, like the Hospital at Home Care program for qualifying conditions. We're talking things like pneumonia or cellulitis.
This program literally provides hospital-level care right in the comfort of your own living room. It includes remote patient monitoring, daily virtual visits from clinical staff, and even the provision of medical equipment and IV therapy if you need it. It is just a fantastic, comfortable alternative to a general ward admission.
That being said, even when you stay within the network, you've got to beware of the procedure copayment tiers. There are 3 tiers, and these fees apply per event, even after you've gotten pre-authorization. It is so vital to understand that getting an authorization number does not mean the procedure is completely free. For example, if you go in for a Tier 1 procedure like a gastroscopy, expect a 2,020 Rand upfront copayment. A Tier 2 diagnostic laparoscopy carries a 5,130 Rand fee, and major Tier 3 interventions like reflux surgery demand a hefty 9,500 Rand copayment. So always consult the tier list before scheduling any surgery so you can budget accordingly.
All right, let's close things out on a high note with Section 5 International Travel Cover. Here's how the primary plan protects you when you leave South Africa. Get this, you are covered for up to a staggering 1.2 million Rand per family for medical emergencies when traveling internationally. Whether you're heading out on a fun family holiday or a quick business trip, this is just an incredible safety net. But listen closely, because the golden rule here is proactive registration. You absolutely must register before your departure. You cannot claim this benefit if you only try to activate it after the emergency has already happened abroad. So put it on your travel checklist.
So now that you know your limits, your networks, and how to defend your finances with the primary plan, what steps will you take today to unlock extra out-of-hospital funds? By simply completing a quick online mental health assessment and a routine wellness screening, you activate the Benefit Booster. This gives you extra funds to pay for out-of-hospital expenses before your day-to-day limit is even touched. The ball is in your court. Are you going to leave those extra benefits on the table, or will you take control of your health and your wealth today?